Hey everyone, welcome. Sometimes it feels like financial freedom is this giant, complicated puzzle, right? So many pieces, it's hard to know where to start. Well, today, we're going to put that puzzle together. We're going to map out a simple, really powerful path to get you exactly where you want to go. I mean, have you ever felt just completely lost on your financial journey? There's so much advice out there, right? Do this, don't do that, buy this fund. It's all just jargon and noise. And honestly, it's super easy to feel overwhelmed when everyone's shouting different directions at you. You are definitely not alone in feeling that way. But what if there was a simpler way, a kind of mantra to cut through all that confusion? Well, here it is. See it, plan it, fund it, track it, repeat. This is basically our roadmap for this whole explainer. It's a simple 5-step system, and we're going to break down exactly what each part means. All right, so let's start at the beginning. Part 1, start with your destination. I know, it sounds super obvious, right? But you would be amazed how many people skip this step when it comes to their money. It's probably the most important and most overlooked part of the whole process. Think about it. You can't reach a destination you haven't even defined. So let me ask you, what does financial independence actually look like to you? Is it quitting the job you hate, buying that dream house, traveling the world? You've got to get specific and define that target. Otherwise, you're just aiming at nothing. Okay, so how do you make this vision real? A fantastic tool is something called a money vision board. And what's cool about this is how it mixes the why with the how. You've got the images, that's your emotional core, your motivation, the reason you're doing all this. But then you add the numbers, your actual targets and the deadlines. And that's what turns a daydream into a legitimate plan. And this right here just nails the point. Dreams become real when they have numbers attached. I mean, saying I want to be rich is, well, it's just a wish, isn't it? But saying I'm going to save $10,000 by December 31st, now that is a plan. Those numbers are the bridge that takes you from dreaming to actually doing. Okay, so you know where you're going. You've got your destination locked in. So what's next? Well, before you start climbing the mountain, you need a solid base camp. And that's exactly what this next part is all about, building your financial foundation. This is the bedrock that everything else is built on. Now, here's what's absolutely crucial about these 3 pillars of stability. The order matters a lot. You have to do them in this exact sequence. First, you got to fix your cash flow. That means spending less than you earn. Simple, but not always easy. Then you build up that emergency fund. And only after those 2 things are solid do you start aggressively attacking any high-interest debt. Stability has to come before growth. So, when we talk about an emergency fund, what are we actually talking about? Well, the goal is pretty clear. You want to have 3 to 6 months worth of your essential living expenses stashed away. We're talking rent, food, utilities, the must-haves. And it needs to be somewhere you can get to it easily, not locked away. Think of it like your financial firewall. It protects you when things go wrong. All right, your foundation is solid. Your base camp is secure. Now it's time for the exciting part, the ascent. This is where we shift gears from just saving money to actively growing your wealth. This is the new investor's guide. But for a new investor, that first question can be a real roadblock. Which broker is right for you? Where do I even begin? It can feel paralyzing. But a really simple way to think about it is as a trade-off between 2 things, ease versus cost. Basically, what's more important to you right now? A really slick, easy-to-use app, or getting the absolute rock-bottom lowest fees possible? And this chart breaks that down perfectly. You've got something like a Tiger Brokers where the user interface is super friendly, really easy to get started with. The downside? The fees might not be the absolute lowest. Then you have something like Poems, which is known for having some of the lowest fees, especially for Singaporean stocks. But the interface can feel a bit clunky, a little less modern. And look, there's no best answer here. It's just about what's the right fit for you. Okay, so you've picked your broker. Awesome. But now comes the next huge question. What should you actually buy with your money? When you boil it all down, your choices generally fall into 2 big buckets, funds or individual stocks. So let's break down your options here. On one side, you have actively managed funds. Think of this like hiring a professional chef to create a custom meal for you. They're picking all the ingredients, managing the portfolio, but that professional service comes with higher fees. On the other side, you've got passive ETFs. This is more like a vending machine. It's designed to just track a whole market index, like the S&P 500. It's automated, simple, and because of that, the management fees are way, way lower. So, to figure out your own style, you really just need to ask yourself a few key questions. For instance, are you going to be a dollar cost averaging person, investing a little bit every month? Or are you going to invest a big lump sum at once? How hands on do you want to be with this stuff? What's your real risk tolerance? Like, how do you feel when the market drops? Answering questions like these is how you start to carve out your own personal investment strategy. Okay, let's recap. You've got your destination in mind. You've built a solid financial foundation. You've even started investing. That's huge. So, the final piece of the puzzle is how do we grow this, automate it, and track it? How do we make this a system that runs for the rest of your life? And the system for making this sustainable is actually really simple. Number one, invest consistently. This is how you let the magic of compounding do its thing. That's where your money starts making money all by itself. It's incredible. Number two, automate, automate, automate. Set up automatic transfers so you don't even have to think about it. And number three, track your progress. The best way to do this, look at your net worth. That's just a simple calculation, everything you own minus everything you owe. It's your ultimate financial scorecard. And this right here is a really important shift in how you think about money. Wealth isn't just saved, it's created. See, saving money is like playing defense. It's important, for sure. But investing, that's playing offense. You're not just protecting what you have, you are actively putting your money to work to build something bigger. And that brings us right back to where we started, the destination. What is financial independence really? Well, here's the definition. It's that amazing point in your life when your investments are generating enough income to cover your entire lifestyle. That's it. That's the moment your money officially starts working harder for you than you do for it. But I want to leave you with one last thought. The real goal here, it isn't just to be rich. It's not just about having a big number in your bank account. All of this, the planning, the saving, the investing, it's all for something so much bigger, so much more important than just the money. It's to be free. That's the real prize. The freedom to choose how you spend your days. The freedom to do work you love, not just work you need. The freedom to live a life that is 100% aligned with your own values. That is the real destination.